Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com, and I was giving the spike trade calls pre-non-farm payroll event. I was explaining that my forecast says that there will be an upward spike in the case of Euro and GBP as well as in the case of USD yen after that of the non-farm payroll. Now, let us review the call and also see the results and how exactly when the forecast fails, we have the trading strategy to limit the risk and maximize the profit. So that is what I'm going to show you in this 15 minutes of post non-farm payroll event, the result and the review. I was telling you that they will be making a quick rise between 12:30 and 13 GMT as an upward spike. In the case of Euro and GBP, I was not giving any comment with regard to the non-farm payroll data release or the average hourly earning or an unemployment rate, because they are all considered as attributes. And now if you look into that of the market, they made a very big spike after that of the decimal non-farm payroll of 38,000 when compared to that of 159 or 160 was the expected level. Okay, fine. They gained the levels in the case of Euro, GBP, and from there they made a big drop. So in what way you will be able to attribute the non-farm payroll and that of the quick rise and the drop? This is what we need to understand, how the players make the quick rise, create the market sentiment, because the traders find that, okay, non-farm payroll is negative for that of US dollar. So obviously Euro and GBP will just gain to that of the sky level. And that is out of greed. So they don't book profit even though they entered. Or some of the traders who have been waiting, listening to that of the webinars and wanted to be very conservative, etc. Probably they might have done the late entry, but what would have happened for such late entries? So when they were taken a buy position after that of the rise, they have made the drop. This is what we need to understand. Why they are gaining the levels? They gain the levels very quickly and book profit of their positions before the weekend. Simple. And afterwards, if we try to chase it, it is of no use. So first of all, we need to understand in the market, people are taking position and closing position in order to make profit, not to talk about the sentiments anymore. So if you are involved with it of the sentiments and think that, okay, here afterwards it is going to be the US dollar weakening days, then you might be disappointed because they make the week beginning false move before that of further rise in the case of Euro and GBP. So any currency for that matter, simply taking the position does not give any profit unless and otherwise you realize the profit by closing the position. Simply holding the position, and when they have made the quick rise of 200 pips, and if you think that, okay, Euro can go to 1.16, I'll wait for that, then probably they may retrace. So one has to understand that it is not the support and the resistance which is important. How the traders are entering into the market is important. So whatever be the type of moving averages, we try to use it. And still, you will develop the mindset to be very conservative because you have that element of uncertainty. When there is an element of uncertainty, the self-confidence goes off. Then automatically you become defensive. Once you become defensive, you are not in a position to capture great opportunities. And see, they gained the level of about, so it was almost zero. Euro was almost zero around 11 GMT when I was giving that of that 11 GMT, the pre-non-farm payroll forecast. And I was telling you that they wanted to gain the levels. And what has happened? They made the dip and quickly gained the levels, and then subsequently they made the drop. And why? I was telling you that they will be making between 13 and 13:30 GMT the gap time move as a downward move. Then subsequently up to that of 15:30 GMT they will be making the lower level swings before making further rise for the weekend. So that will be the late session rise. So after that of forming the drop, that means the players gain the levels very quickly. All quick moves are false moves. So they quickly gain the level, induce the bullish field, because the data also say that the Euro and GBP are going to be very bullish. So people freely go and buy, and the players dump the positions. After dumping the position, do you think the players are going to give them the profit? No, they will make further downward move a little bit. Further downward move and test the patience. Automatically, the traders liquidate the long position what they had taken. Then the players buy such liquidation, again rise it towards the close, because many traders after the rise thinking that okay, it has reached the support level, it will be making a drop, so we will take a sell position. So they take such sell position, and when they are making the drop, immediately they will find okay, the support is 1.12, or they will be filling the gap between 1.12 and 1.13. So we will wait for that gap to be filled up. Simply they wait, but the players gain further level and induce them to do the short covering. Whatever they bought after that of the drop, they sell it to such short sellers, and they don't take any position overnight. It is simple game. They are doing it. We are not able to understand. We try to complicate it and make our understanding very complicated. And ultimately, we find that we are only talking during that of the data release time and not able to capture the profit. So this is what ultimately important. So what we really need is the confidence to understand the intentions of the players, so that we'll be able to really make very good profit from that of the market, and especially when they are making the spike. Now I gave the call that Euro, we can take a buy near that of the low. I was giving the call around 11 GMT. So I do not know by 12:30 GMT how they are going to make a downward move. And I was expecting a brief downward stop in the case of GBP, but they did not do. And I was expecting them to visit the Euro low. But actually what has happened, they came closer to 1.1139 and went up. So, in such a scenario, the level is of no importance for us. And especially Australian dollar, they came a little bit and filled it. And in the case of Australian dollar, the position is closed. And GBP, if we modify and take it around 1.4436 and 06 and 07, when I was talking, then we would have made a huge profit on that. So why I have given a very conservative levels for entry, and also explained that around 12:30 GMT, you watch, and 12:25 to 12:30 GMT, you watch the level and take it, and they will make the false move and make the intentional move on the upside. Now, I also give the call that 108.56 we can take a buy in the case of yen. Now you will be noticing that yen has made about 200 pips drop. But I kept the hedge, and the hedge was making profit. Here the trading strategy helps us to make money. See, when yen has dropped from that of 108 level, and it came initially to 107.99, went up, and it was coming closer to that of 108.35, and afterwards started making the drop. So in such a scenario, what we are supposed to do is, when you know that they are making the USD weakening move in all currencies, we can simply close the sell position, book profit on the hedge. Buy position, simply close the buy position and book profit on that of the sell position. If it have closed the buy position with 40-50 pips loss, and the sell position we can make about 100-150 pips profit, we'll have a net profit. See, we'll be able to do the fearless trade provided we know how to handle the positions. And if you do not know how to handle the position, and instead you ask everyone, okay, what is your call on euro? What is your call on yen? What is your call on CAD? You will be simply asking people. Different people will give different approach to that market study, give different levels. You are not going to gain any sort of confidence unless otherwise you learn how to understand it. See, if you notice it, I have explained many times that they are limited to gain about 150 pips net change in the case of euro, 250 pips in the case of GBP as the net change for the day, and about 200 pips in the case of USD, 200 pips in the case of USD CHF and Canadian dollar, and 100 pips in the case of Australian dollar as the daily limit. Those who have been following my forecast and also my trading system might be knowing it. And they already gained about 171 pips. Further gain is much limited here. So this is what we need to understand. Afterwards, simply looking at the chart and entering into that of a buy position is not advisable. And in the case of GBP, as I told you, that they have reversed Euro GBP cross, and because of that, they wanted to gain more in the case of Euro and gain less in the case of GBP, so that Euro GBP will make an upward spike. And in the case of Euro, they just gained about 173 pips, whereas in the case of CHF, they just dropped only about 127 pips. So that means less drop in the case of USD CHF when compared to the Euro rise. And also in the case of Canadian dollar, you find 130 pips, they made the drop. They are capable of dropping about 200 pips, but they just dropped it and afterwards gained back the levels because they need to swing the market again and again. And they have to create the uncertainty and capture the profit from that of the traders. So Australian dollar, they just gained from 72 area to 73.50 and come down and almost about 100 pips net change. So ultimately what we need to understand is they got a limitations with regard to rise, and so even though the market sentiment is phenomenally weak, still they cannot make indefinite rise in the market or indefinite fall in the market. So that we need to understand the limitations of the players. Then we'll be able to do the fearless trade. Otherwise, you think that, okay, suppose you have taken a sell position, if they gain, then immediately you will develop the feel that the market might further shoot up and you have to incur a huge loss. And so that is what you need to understand. All quick moves or false moves in the market. Then you will not be trapped with the fear. Now let me answer to that of the questions which are asked. So looking back now, where did you get this knowledge? It's all from reading the charts. Okay, now there is a question which is asked, I think, for those who are, a person who has entered into my webinar recently. Actually, I developed a postdoctoral work, a statistical algorithm with which in 1978-80, and then subsequently I started testing it in the market. And from 1999 onwards, I've been giving the forecast. And through FX Street, from 2001, when FX Street started, I was the first one to give the forecast in FX Street. And subsequently, all the banks and everyone started giving the forecast and also analysis. So I do not want to talk more. It might appear it is self-boasting. It is not like that. Actually, after a very long research as a postdoctoral work, I developed this algorithm with which I'm able to read the intentions of the players from time to time. And besides, I also developed the fine-tuning by interacting with various bank dealers. And those bank dealers, in fact, shared confidential informations. Thereby, I was able to understand the market is totally manipulated, because those dealers were very much interested to know when the unexpected events come. At that time, the players will also be trapped. So that is why they got associated, and still they have not trapped me in any way, for the simple reason they like to know when unexpected events are to happen in the world and which could affect the financial market very badly. And I was the one, in fact, I gave the forecast even through FX trade in 2001 September 11 attack. And I said that from that time onwards, US dollar will be like a toilet paper. And that's what happened after September 11. US dollar weakened like anything. At that time, euro was trading around 0.78. And so that is how the story is. I do not want to take much time in giving all the explanation. Probably during my next webinar, I'll explain if we happen to come. Okay, with regard to the GBP position, see, let me tell you, the players have got a very systematic approach in handling the market. They do the sequential move, irrespective of the data release. I told you that non-farm payroll is US dollar negative. Okay, USDN has made about 200 pips move, and Euro has made about 174 pips, whereas GBP has made only about 89 pips. Why? Who is restricting them to do such moves? Because when the traders think that GBP is going to gain more, when Euro has gained about 175 pips, so they are taking the buy position around 45.50 or 45.60 and things like that, expecting it will go to 46 area. They immediately reversed and inducing them to liquidate. Similarly, when USD they dropped it to 106.69 in an euphoric condition, or just triggering all the stocks to be filled up, then people might think that endlessly USDN will drop. No, you just watch. They will accumulate here all the buy position around late US session. You will come across, they will close USDN around 107.50 area. Then Monday, they will make the week beginning false move. At that time, they will make downward move in the case of Euro, and GBP gain the levels in the case of USDN and USDCH. People will be astonishing and confused why why non-farm payroll is being discounted, and then subsequently you'll find from Tuesday onwards they'll gain the levels in the case of Euro and GBP without dropping USDN and USDCH. So this is the way they handle the market. If you understand how the players handle the market, then you know what currency you have to do and what type of trade you have to do. And it is always advisable to do only swing trade during that of the month beginning and month end. And you can do the position trade from that of the next week onwards till end of June, so that you will be able to capture about 700, 800 pips. But not during that of the month end and the new month beginning time. So always keep in mind that the players are handling bringing in such volatile moves during month end and the month beginning time, new month beginning time, mainly to handle the derivative markets and also the forward covers of the exporters and the importers. So they handle all the positions and make huge profit. They are interested in profit, we are interested in level, and that is why we find that invariably we continue to develop surprise when they make such major reactions in the market. So always keep in mind that the players create the market sentiment and act against it of the traders. All quick moves in the market are false moves, and don't become emotional. And if you simply become emotional, say Euro is rising, GBP is rising, yen is dropping, oh, fine, you become emotional, but you are not able to capture the profit. So for that, you have to develop the calmness in mind and see that, okay, what trade I'll be able to do at this time. And this way, if you develop the calmness by meditation or keeping away from that other market frequently, so that you will be able to really understand market rewards patience and not impulsive talk. And you know that in all the radios and other the expressions, especially during the data release, they in fact make the traders euphoric. They make the traders to develop a real fear and become emotional, and that in fact is detrimental for the traders. So the traders should not follow such things. If they follow, then invariably they will become victim of such act, because the players make all quick moves in order to trap the traders, and especially the trading platform makes such quick gaps and not filling your hedge or the stops. They are all purposely done in order to trap the traders. So you have to be very careful, and what you have to do is take the position during such quick moves. Then you will be able to exit as quickly as possible, and that will give you the real opportunity trading. Anything for the next of the day? What is planning to do? Okay, they are going to gain the levels up to that of the high in the case of Euro and GBP, and also reverse USD yen and gain the levels after coming to that of the low gain. They will induce the traders to liquidate the long position and slowly accumulate the buy positions, because they want the traders to sell at the low, buy at the high. And next week, you will not come across these levels. People might think that they've been open with a gap and straight gain the levels, but the players are here to consolidate around these levels, make frequent downward stop and on Monday on the downside. So they will discourage traders taking any buy position, or those who carry the position during the weekend. They will induce them to liquidate at a lower profit, then subsequently gain the levels. For that, USDN is going to be the first currency to gain on Monday. So don't develop bearish and bullish feel, which will be detrimental. You always find that there is a buy level, there is a sell level. The buy and the sell levels might continue to change from time to time. Ultimately, what is more important for us is to read the intentions of the player. Then you will be able to really capture the profit. Okay, so I take this opportunity to thank FX Trade for the facilities provided to give the pre and the post non-farm payroll release webinars. So actually, I was giving this particular suggestion so that the traders will be able to really participate in such quick moves in the market, rather than be conservative and wait for all the things to be settled and then enter into the market. Because quick moves are great trading opportunities, provided you understand the methodology followed by that of the players. They are also human. They are not God to make indefinite rise or drop. So when a person is acting against you, then either you have to show your muscle power, or you have to use your intelligence to topple him. So the players have got a huge money power. So you will not be able to fight against them with your money power. So when you have limited resources as equity, if you try to take the position against them, then you find it extremely difficult to hold the positions. But you find the weakness of them. Okay, they can only make a rise of about 150 pips. Okay, after the rise, when they make some extra rise, take a sell position, you'll be able to capture some profit. So you continue to have the trading strategies and continue to have the trading possibilities in the market. But if you become afraid of moves and immediately think that USD yen could go to 100 or below 100 and things like that, if you give such imaginations, then invariably you will not be in a position to change your mindset. So the players create the market sentiment and act against that of the traders. Once you become victim of such sentiments, then you find it extremely difficult to trade. So I take an excess time, sorry, because there was a delayed start. So I take this opportunity to thank all the people who have come here to listen to the webinar. See you on Monday. I'll give the forecast for the next week. Wish you all a very happy weekend and good trading and understanding.